Welcome everyone to this webinar on real estate investments and tax. We have an hour today and we'll be focusing on some of the tax benefits that you can access when you invest in real estate and also some of the pitfalls and traps for the unwary that can arise. This talk will broadly break down into three sections. At the start, I'm going to focus on some of the recent technical developments arising out of the budget and also some of the trends that we are seeing in the real estate tax structuring world. And then I'm going to draw that all together by talking about some of the sort of general sort of issues that you might face when structuring transactions and what to look out for and how to maximize the benefits that are available to you. And also finally finishing off with some points that we are seeing causing a little bit of difficulty in how to deal with them. And as I said, so this is the start of the first section. I'm going to talk a little bit about some of the tax changes which came out of the budget, which were unexpected. I'm going to talk about something called operational real estate and then finish off with an update on REITs because they are becoming particularly prevalent. So to give an overview of the recent tax changes coming out of the budget, I think it's fair to say that this budget had more announcements which were relevant to real estate tax than previous budgets. It's also fair to say that those changes were relatively unexpected. There's one sort of pleasant surprise and one not so pleasant surprise. So firstly, I'm going to talk about multiple dwellings relief, which, just to give a little bit of basic background, is where, because given that residential rates of SDLT are much higher than commercial rates of SDLT, when you are buying two or more dwellings in a single transaction, rather than potentially paying a much higher rate of SDLT on a big number, which is the aggregate consideration that you are given for both dwellings, what multiple dwellings relief, commonly known as MDR, allows you to do is break the transaction down so that you are treated as if you are buying lots of lower value dwellings. And because of the way the SDLT system works, you pay SDLT based on a slice rather than a slab basis. That means you end up with a lower result.